In this video, we're going to talk about the mindset you have to have. I'm going to share with you the mindset I have when I buy a stock and that stock falls. I've been doing this long enough to realize that a trade begins when you buy the stock and it ends when you sell the stock. Everything else in between is a mindset and a function of selling premium. That's why I can be down on a stock, but still feel like I'm picking up crumbs. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red-hot covered call video. So much has happened since our last video. We're going to talk about something today that I absolutely know is going to up your game. I get questions all the time about how to deal with a falling stock. Now, for me, I've been doing this so long. I have so much experience. When a stock falls, it does not bother me. Now, with that said, that does not mean that's how you feel. Now, I'm not going to try to tell you how to feel. What I'm going to do is I'm going to share with you how I feel and how I look at it. And I believe this is very important because look, if you're going to be in this game, right, you're going to try to use the stock market, you have to be able to handle risk. You have to have some sort of tolerance when a stock falls. Now, I want to share with you how I deal with that. And I think you're going to like it because at the end of the day, there are so many people out there that lose money, they lose motivation. And to be honest with you, they're afraid to get in the stock market. I mean, they'll get on the freeway and drive 120 miles an hour, but they won't get in the stock market because they have been conditioned to be afraid of it. Now, we're going to talk about that today. So before we get going, I want to tell you that we're going to talk about the weekly one stock, $1,000 options challenge. I'm going to give you an update on that. We are absolutely killing it, and it sort of folds into the bigger topic for today. Also, I'm going to mention the newsletter. We're going to put out the monthly newsletter. I want you to be a part of it. It is going to focus on generating weekly income. So look, if you like what you're hearing today and you want to be a part of the channel, just subscribe to the channel. It's right there. It's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing and what I have been doing over the past 3, 4, 5 weeks is talking about this 1 week, one stock, $1,000 weekly challenge where I use one stock and I'm trying to generate $1,000. Now, for years I've been doing this, and for me, it's all about picking up a little crumb. If you've been watching my videos, you know that I love 100 here, 100 there. Man, if I can do a $200 trade, those are crumbs to me. And for me, if I pick up one crumb, 2 crumbs, man, we're talking real money. And I've always believed that if we keep our hurdles low, we can have success, right? If we have little trades that are successful, that motivates us to do the next one. I mean, every time I do a successful trade, and to be honest with you, it could be $100, it could be $1,000, does not matter. Man, that's a green trade, and I rack it up, feel good about it, and then I'm excited to do the next one. That's what's important here. We stay in the stock market because that's going to be our best chance to generate that income. And that's what we're all looking for. Because look, we don't know if we're going to have our health. We don't know where we're going to be in retirement. But man, if we can learn this skill, we can have a chance making income in retirement. Or hell, paying some bills or living a good life. That's how I see it. So when I show you my numbers and we talk about this, that's where I come from, okay? This has always been an experiment in retirement. I told Jerry from the very jump that I'm going to learn how to write covered calls and sell cash secure puts to generate the extra income. See, when I went to all the seminars and I listened to the stories, the one thing that jumped out at me was they are using their portfolio, however big or small that is, they're using their portfolio to have a part-time job, generating income. And that's what it's all about. Because look, I don't know where my health is going to be. You don't know where your health is going to be. But man, if you have your noggin and your right hand, a little bit of money, and a laptop, look, we can do this, but you have to get your education, get your experience, and then you can have that success I'm always talking about. That's important here. Okay, so I'm going to be putting out another free newsletter. I want you to be a part of it. All you have to do is go to my website, ctpdashboard.com, and click free newsletter. Give me your email address, and you'll be on my list. This newsletter is going to focus on the weekly covered call and the weekly cash secure put and how I'm using that right now with my $1,000 challenge. And I think it's going to give you that great base of where you need to be when you're working weekly covered calls. Now, quickly before I move on, I'll tell you what, this year is turning out to be the greatest year for me writing covered calls, selling cash secure puts. Now, watching my videos over the past couple weeks, you know why this is happening. I mean, when you're writing covered calls where you're generating 1,000 here, 1,500 there in a week, yeah, in a 5 and 6 week period, that is turning out to be over $10,000. So my goal of $55,000, God willing, is about to be reached before we even get to July. And I'll tell you why. Because I have 2 very large trades coming off the board. So where last year was a challenge to try to get to my goal of 55,000, this year is unbelievable. Has a lot to do with the volatility. The volatility absolutely was off the chart. So many times I showed you videos where we were getting premiums that were paying 10 and 15%, where in typical times or non-volatile times, we'd be making 3 and 4%. I mean, that's what volatility does to options prices. Jacks them up, whether up or down. We need to learn this so we can use that to our advantage. All right, so I know some of you are saying, look, dude, you got to get to this. Let's do it, okay? So I'm going to show you my UPRO trade, but I'm going to actually use Roku for my example of how I deal with stocks that have fallen. I bought the stock has fallen. We're going to talk about it. Okay, real quick on the update. Remember, the pinned comment below has the link to this. This is my web tracker for this weekly covered call trade that everybody's excited about. This week was an interesting one because if you remember last week, I bought 1,000 shares of UPRO at $46.50. I wrote the 47, one deviation out strike, ended up getting about $1.40 for that. And I'll tell you what, I was counting my chickens before they were hatched. If you remember in last week's video, I counted the profit. Well, fast forward, UPRO has literally fallen from above 50 to now trading at 42. And guess what? We ended up buying back that option that I got paid $1.40 for a dime. We took the trade off the board. I had hopes of then writing a next Friday covered call, a June 19th covered call. Wasn't able to do that. Still have the shares. We're probably going to write a covered call on Monday, hoping to get $1. Now, I don't know if I'm going to be able to get $1 in a 5-day period, but we're going to try. If you want to keep following me on this, in the pinned comment is the link below. Now, I will tell you this, over on my Facebook group, I'm updating that group all the time, almost every day, on what's happening with these trades. So if you're interested, definitely stay tuned. I always keep it updated. Now, we're going to use Roku for my example. Now, this is where we start to get into this mindset that I always talk about. Now, I understand for a lot of you, you don't have the mindset yet. And to be honest with you, you haven't traded enough to have the experience and to feel comfortable. I'm going to use Joe Montana as an example. Joe Montana was the quarterback of the team of the 80s, the San Francisco 49ers that won the 4 Super Bowls in the 80s. Now, I'll tell you what, Joe Montana had a nickname. His name was Joe Cool. He was so good, and he was so good in times of pressure. He was Joe Cool because he handled the situation, man. He was cool under pressure. Now, the only way Joe Cool gets there is through experience, being a part of those situations, and having success. So Joe Cool, I'll never forget the story. If you remember in the Super Bowl against the Cincinnati Bengals, for which the 49ers with Jerry Rice, Joe Montana, and all the Hall of Famers, they're down with less than a minute to go. And they're on the final drive. And it looks like this team of the 80s is going to lose to the Cincinnati Bengals. Now, Joe Cool comes to the huddle during a TV timeout, and everybody's freaking out. Everybody's stressed, man. They are worried. This is a team that has not lost in the Super Bowl. They are literally winning everything, and the team is freaked out. Joe Montana comes to the huddle and literally steps in the huddle, and he looks into the crowd, and he says, "Guys, is that John Candy right there?" That's an urban legend that even Joe Montana himself said is true. Now, my point to all that is when you have that experience and you've been in the trenches, right? You have done these sort of trades, things like this get a little easier. So when I show you my Roku trade here, it's really about a mindset, okay? So the mindset is this. When I buy a stock up here and the stock has fallen, for me, I have a couple simple rules. One, a trade for me starts when I buy the stock. 2, a trade ends for me when I sell the stock. And 3, anything else in between is me moving my chips back and forth on the table, using a poker analogy. Anything between me buying it and me selling it is me selling premium, generating income. See, when I buy Roku up here and the stock is trading down here, that does not mean I am losing on the trade. See, my mindset is I'm going to write a covered call and then buy it back if the stock falls. I have done this so many times with Roku that my cost basis calculator, I have literally had to add multiple lines. Because when I write a covered call and the stock goes down, I will take that trade off the board. I have told you this before. The reason I do that is because I want to pick up that crumb and then I want to reset. I want to sort of reboot the trade. Right? Both mentally and where we're at in terms of the trade. Because I'll never forget the story where I bought Chevron, I wrote a covered call, Chevron fell, and the option for which I got $3 was trading for like pennies on the dollar. And I said, that's going to go to expiration. It'll expire worthless, and I can then write another covered call. The very next day, Chevron gets news, the stock jumps some 10%. And that option that I could have bought back for a dime is now trading back at $3 and $4. I could have written the next covered call. It's opportunities missed, right? Or opportunities taken advantage of. This is why I always tell you, every single trade stands on its own with me. And for me, it's about flowing like water. Be water. We buy the stock, we write the covered call, the shares go down. We don't get flustered. We don't freak out. What we do is, that's a trade all by itself. We buy the option back, we consider that a crumb. And when we do that time and time again, we have crumbs on the table. So when the stock moves higher and we sell it for a profit, we have made crumbs along the way. And that's what it's all about. And that's why I wanted to show you Roku instead of talking about my most recent trade with Gilead and UPRO, for which I'm down. But I wanted to show you Roku because I bought Roku at 143. But see, because I haven't sold the shares at a loss, this is not a done deal. This trade is not over. For me, it's a mindset. And getting back to the Roku trade, when Roku rallies, I'm able to then use the charts and I'm able to write that out of the money covered call. And as the stock peels back, remember, over the years, I've told you, man, this is how this works. Wall Street runs them up, peels them back, runs them up. So what we have to do is have a mindset that we're going to use our exit strategy. We're going to write a covered call, and if the stock goes higher, we're going to reset, understand where we're at. We might have to buy the option back, adding to our cost basis. We write the next covered call. Then the stock falls because that's what happens. That's what happens with most of the stocks. When the stock starts to fall, that option starts to fall. We buy the option back for pennies on the dollar. We have uncovered shares, still at a loss. We then write the next covered call. It really is a mindset that you have to have. Because if you have a mindset for which you buy a stock, you write a covered call and it falls and now it's down some 3 and 4 points and you're freaking out, then here's the deal. You just have to sit on the bench until you can get that tolerance for a little bit of risk. Now, we're not all perfect. And that's the important thing to understand. Look, it happens to the best of us. But how we mitigate losses, how we handle our emotions, really is all about a mindset that we all have to have. Look, trades don't always go the way we want them to. We have to be able to handle that and move on. Over the past 3 weeks, we've done some great videos. I want you to go back and watch them. We talked about buying a stock, writing a covered call. The stock goes above our strike price, and I showed you how to roll for a credit. Then last week's video, I showed you that I did the same thing with JP Morgan, but I decided not to roll for a credit. And the reason I didn't buy it back and roll for a credit is because I thought JP Morgan could come back to my strike price being 96. But I'll tell you what, last week it almost did that. Now, JP Morgan is probably going to continue to go sideways to higher. My shares will probably go away. But what I'm trying to do here is show you how we can handle trades. But see, there's this other element that you have to understand. There's an emotional element. There's a mindset element. And that's what I hope over the years, over the many years I've been doing this, I share with you. Because people don't talk about the emotional side of it. When you buy a stock and the thing falls some 30 points, man, you feel like a loser. You've lost all motivation. No, there is truly an emotional side to this. How we handle that side is going to really determine how successful we can be. Now, for me, I have no problems with the stock falling. I'm going to have a plan, execute the plan. I had somebody just this week say, John, you're down $4,000 on UPRO, man. How do you not sweat that? Well, of course you know how I handle these things. These things do not bother me because I've been there, done that. Yeah, I'm down and that's not fun, but that does not mean I'm not going to continue executing the plan. Now, hopefully it turns out to be a positive trade, and to be honest with you, I know it will because I've had that experience, I've had that success. Hey, look, I'm going to leave it there for this week, man. We have so many trades to talk about. It's coming. And remember, the newsletter's coming. I need you to sign up for that. We're going to talk about generating the weekly income using weekly covered calls. Now, look, if you like what you heard today, go ahead and subscribe to the channel. It's right there. Bang that like button. Lets me know you like what I'm doing. And look, go over to Facebook and follow my Facebook group, CTP Dashboard. I'll tell you what, man, that is our off YouTube discussion. Hey, look, be safe, be healthy, most important, be lucky. And until next time, may all your covered calls be profitable.